I'm recording, so all right. So it was like I was saying at the end of that. So the Federal Reserve is like, okay, we're gonna raise interest rates. So if they raise interest rates, does that mean that like the banks, like how is it like do banks themselves pay like interest or
Yes, they do. Banks pay out interest to people by a number of methods, right? Have you ever heard of certificate of deposit?
um
A CD?
uh it's like you like a person can make interest with they put money in a certain type of bank account.
Not a
Right.
bank account. It's kind of like a very short-term bond. It could be for 30 days, 60 days, whatever. But basically, let's say you put $100 into this certificate of deposit with a 10% interest rate, which that's like absurdly high for a CD, but this is just an example. And it's a 1 year CD, so you put in $100 into the CD, which the bank gets, and they can spend that on other things such as making loans, right? And then in return, a year after you buy that CD, the bank pays you your $100 called your principal back, plus another $10 for the 10%. So you pay in $100, a year later you get back 110. That's so banks do pay out interest as part of their expense. There are certain things called money market accounts, which is like a checking account that it'll be something like $10,000 minimum required balance. And in exchange for that, if you it pays a small amount of interest on your deposits. However, those are not always insured by the FDIC. That's a little side detail. So that's another way that banks pay out interest. And then obviously banks collect interest from loans, credit cards, and so on and so forth, right?
So if the Federal Reserve says, okay, we're gonna raise interest rates, does that mean that like they're raising the rate of interest for like people who have like those types of checking accounts, or does it mean that they're gonna raise interest rates on like the loans that they give out?
It depends on the specific terms of the loan, right? There's two types of loans. You have a fixed percentage rate loan and an adjustable percentage rate, or APR. You probably heard of it like on a commercial. Like, oh yeah, buy this credit card and it has such and such APR, right? So if it's a fixed percentage rate, and usually a mortgage is fixed, but they do have adjustable ones, and this is one of the scams of capitalism. If it's in the terms of your agreement, the contract that you signed to take out the line of credit or the mortgage, the loan, or whatever, right? And in that contract it says fixed percentage rate, then when the Fed jacks the interest rate up, by law, it does not change, and they won't change it. And if they do, you can take them to court and sue their ass. But and if you have an APR, an adjustable percentage rate, then yes, it fluctuates with the market. And you'll never guess what type of debt that wealthy people tend to have versus the kind of debt that poor working people tend to have. You'll never guess how that plays out.
Do the poor working people have way more debt than the rich people?
They have the adjustable percentage rate debt.
Or
That's
actually, rich people, they don't actually spend their own money in order to get
mhm,
like yachts and like luxury goods. They get
right.
loans. They get loans from the banks, and then because the banks know that they have like a ton of money, so
Yes.
then they get a loan from like a bank in order to buy like a yacht, and then
Yeah,
Correct.
and then
they
like
move it into a portfolio or something like that.
like
Yes.
they
Yeah.
don't even
Exactly.
spend like they don't even spend their own money on on luxury goods.
Oh, they do spend. Yeah. I see what you're saying, though. Yeah. That's a good point. So yeah, when people say that Jeff Bezos or Warren Buffett or whoever is a billionaire, they don't just have a billion. Like I have my checking account. There's a balance of $13 billion or whatever. Like no, it's tied up in assets, and some of those assets are like real estate. Some of them are tangible things. But a lot of it is shares of a company. And so, yeah, they will take the loans out using their shares as collateral. And in fact, that is one of the greatest income tax fraud ways that rich people evade taxes is they pay themselves a stock because stocks are not taxed until the
So-
point at which you sell them, and then they give themselves a quote unquote loan using the stock as collateral, and then that's their income. But because it's written down as a loan, they're not actually taxed on it.
So you could say that rich people don't really. I mean, like, they have. I mean, it's almost certainly they do have a ton of money, but their wealth is not like rich people's like wealth is not really like represented in the form of money. It's like actual
Correct.
real assets, like cars or like
Not
factories,
even real assets.
or like the stocks, or
yes, that's what Marx called fictitious capital.
yeah.
So,
So
yeah.
Wait, hold on. I think you wanted to say something.
Well, no, I think we put the nail on the head there.
Yeah.
It's that a lot of their wealth is kind of control of the industry, effectively. How much
Yes.
do they have in Amazon? How much do they have in Wells Fargo, or name your favorite stock here? But they wager that to a bank. The bank looking at it and seeing, wow, that's a lot of fucking control, and also that's an assured amount of money, hopefully, as long as we don't believe this person's going to do financial suicide anytime.
That's a big assumption.
Yeah. And so all of them are working in their best interests, but at the end of the day, they then are able to subsist with that amount from the bank, and are continually able to accumulate more capital with much more flexibility than a working class individual would have in trying to accumulate.
How does this tie back to raising interest rates?
Mm-hmm. How does what tie back to raising interest rates?
Okay, so I mean, because if it is that debt, the higher price of debt
Mm-hmm.
is represented through the raising of interest rates, then because interest rates, like, how is it, because you get a loan,
Mm-hmm.
I don't.
Let me take well, does anyone else want to take a shot at it?
Well, so
I can try, although I'm not very. You guys humble me here. I'm not as smart.
No,
as you
you're
on
good.
Subjects. So basically, my understanding is you would go to a bank and they would give you a loan, and then you have an interest on that loan to pay back to the bank so that they can make money from the loan that they loan to you.
Yeah,
and
that's
what
what
the
I was
interest is.
saying.
It's the accumulation of debt that you have to pay back. And I'm guessing that over the years, the interest rates will go up because the amount of money that they're making from you will decrease as the price of the value of the dollar changes.
Well,
So
um,
yeah, that's my understanding of it, and that's why they would increase the interest rate. Although it's probably it's just basically
wait.
scamming
Can you repeat? Why is it that you think that they would raise the interest?
the value of the dollar would change so that the interest that they would be making on the loan would be less over time as the value of the dollar goes down.
Okay.
That's my understanding of it, although I have a
Mhm.
very elementary understanding.
that
so
that makes
inflation.
so like the raising of interest rates would be in response to like potentially in response to the value of the dollar going down. So then the interest rates would increase so that the banks can continue to make like
yeah,
a profit.
they could continue to make a profit from it, and also because they don't want their rate of profit to go down. If the interest rates at the amount of money they're getting is less, with less value over time, they're going to increase it. So which is sucks for the person with a loan. But that's I think the banks have like this idea they have an incentive to do that.
Mm-hmm.
So that they can keep making profit.
But Justin, is that like the value of the dollar going down? Is that like the primary reason it is that the interest rates would go up, or
That's the stated reason, and
Stated.
that does have stuff to do with it. Yes.
but why is it that the interest rates really go up?
Well, it's like they said because they want to keep their profitability,
Because they want to keep. Well,
but it
The
also
interest-
does decrease the money supply.
Part of it is that the interest rates in it, what we're talking about is just how much they can get compensated for loaning money out to someone. So in the case of us having a CD account, we're loaning money to the bank for them to then increase their own profit, and in return we get like $10 back basically over time for doing like nothing with that money, and the bank gets to do whatever they want with that money. When we get a loan from them, they're trying to extract as much profit from us over time in paying back that loan as they can. And so if at the end of that loan, at the end of that payment, they don't get that good of a payment out of it, some banker fucked up somewhere down the line when it comes to profits.
so
right?
so I mean, by interest rates rising, it increases the price of debt. That just means for like the individual like loans from the banks. Because when it is that you said that, Justin, I was thinking of like other debt extract, like rent extraction areas, like renting out like a car, or renting a house. But I mean, even then you would get, because you could get a loan from the bank for like, that would be a mortgage like for a house or for a car. And like everything in this economy is like you get a loan because nobody can afford to pay like up front for like
Yes.
these things. So then more and more things are being bought from like loans from banks. So if the interest rates go up, then that, okay, so because the economy is super financialized, then nobody can buy things up front. And like I was saying, if you want to like buy a car, you can get like a loan from the bank, or you can like get a loan to buy like a house, but those loans have interest rates, or a lot of the
Correct.
times they have interest rates. So I mean, there's a bunch of other things you could maybe get loans for too. So then, like this, because this economy is like is like is like controlled by the banks. Like you're okay. I think I'm starting to understand, because everything in this economy is like bought on like a bad
credit?
form of debt, because there is good debt and bad debt. There is a difference. It really depends, but so if the interest rates are increasing, then that just in general, that just means that the price of like debt, to like go in debt in general to like the banks, which is going in debt to the banks in this economy, is like for everything. That means that the price of like basically everything that you would get like a loan, or you would get like money for, would go up.
Yeah, exactly.
Because it's like so many things like are, it's like because the banks, they want to make profit, so the Federal Reserve, like I'm trying to piece together the pieces, because
Yeah, it's definitely. I want to say one thing though, real quick. And I'm not like I think it's important to realize that it's how do I say this? Like, we don't want to put too much focus on the banks in particular. And the banks are bad and stuff. Like, don't get me wrong, but it's very easy when you start like specifically pointing out like, oh well, it's specifically the financial capitalists, and you start like excessively criticizing the banks. And I'm not saying that anyone's doing this, but like putting too much of a focus on a bank can get into some dicey territory that can approach like fascist logic.
I
That's what they do.
understand that, but the
Yeah.
banks are, and finance capital is absolutely predatory. Like,
It is, yeah,
especially in the
absolutely is.
modern day, like if you ignore, like if you just completely go into like industrial, how it is that industrial capitalists are like, they're bad, but if you just completely ignore like finance capital, then that's something that a lot of Marxists or a lot of socialists do. Like they have zero understanding of like finance capital or of like banks
It's not
or
English.
money. It's that's
Hold on. Let them speak though.
okay.
Oh no, sorry, I didn't know who that was directed to.
The
Penta, go for it.
yeah. I was just saying that a lot of socialists and Marxists, they only want to say that like industrial capitalists are bad, they're predatory, wage labor is 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 extractive, it's exploitative, but then they completely ignore. I feel as though that this topic is not understood. It isn't understood well enough, and people don't understand this like to a good extent. Like I think
Yeah.
that it's sort of in Marxists, because Marx wrote Volume 3. That's like the entirety of Volume 3 of Capital, right? Like understanding
I've never read it, but yeah.
like finance. Like
No, real quick, did anyone else want to say anything? I have a comment, but I
Yeah,
want to let
so-
other people speak first.
I think the issue is not so much that we don't want to understand it. We have twofold problems in that a lot of people, will kind of ignore the financial capitalist end of things. Just more in I think part of that is that a lot of people have a hard time understanding these subjects, even capitalists, even people that are prone to have faith in this system. Will have a hard time wrapping their heads around the bureaucratic, like, just maze of shit that is our banking systems. And it's not something that we should necessarily neglect, but we have to understand it in a broad like system of incentives that are given in each different direction for the kind of the bourgeois system that we have. It's not just individual business owners. It's not just the banks. It's not just the state. It's all of them and their incentives that kind of coincide and web in between each other, right?
Yeah, I think that it's more like I feel as though people don't understand finance well enough, and it's sort of like it's they yeah.
Yeah,
This is an
I
important.
agree. I agree with that, and yeah, like it is important as especially as socialists and scientific socialists to like understand the science of finance, right? But I want to emphasize that like the reason that we do all this political education and stuff fundamentally is because ultimately we want to take what we learn here about how capitalism works and apply it to the actual class struggle, right? And I guess what I'm saying is like with that in mind, if we focus, I guess, how do I say it? Like, it is important to understand this stuff, but if we have too much of a focus on it, then we start like the financial capitalists and industrial capitalists are both enemies of the working class, right?
Yeah,
Like,
and they the thing is that they're not like they really, as it is that capitalism progresses, the line I think between industrial and finance capitalists I think becomes more and more blurred.
yeah. It does. It certainly does. Yeah, I just wanted to say, like, we got to be careful when we talk about things like that, because if you go too far in that direction of, like, focusing on finance capital, then it's just a hop, skip, and a jump from that to, anti-Semitic conspiracies and stuff,
Yeah,
because that
but
is
that's
something
like,
that's played on, that people, fascists in particular, play off of.
yeah, yeah,
And I'm not saying that's you at all, to be clear. I'm just saying, like, in general, that's something that I believe we need to be aware of. You know what I mean?
that is true. That is true. Like that is an important aspect because it's yeah.
Okay.
You
Hey,
know, that's something to be conscious of,
yeah.
especially in the socialist movement. I think a lot of people fall into this habit of trying to make characters and make certain subgroups of the bourgeois like the bad guys, and very quickly we end up with some Kanye themes, some Nick Fuentes vibes, you know. So
Yeah, and I'm not saying that's you at all, because I've never seen you say anything like that, but it is something. Yeah, it's definitely something to be you got to be careful about that. But actually, I might have to go make my kids some food, so I
So
have to jump off here.
I just want to summarize. So when it is I say that the Federal Reserve raising the interest rates, the effect is that the loans that banks give out for things within the economy, so people will have things. It is like if they give a loan out for a car, a house, whatever, the raising of the interest rates that will I mean that's basically just for the loans that the banks give out, right?
Yes. And then it eats up.
yeah.
It relates to what we were talking about earlier. Real quick, I'll just summarize, and then I really have to go. But you have a set amount of nominal wages you make every month. Let's say just hypothetically $2,000 a month, and let's say that they raise the interest rates from 5 to 6%, and you go from paying $100 a month to, I don't know, $120 a month with all your debt. Then you're not making any more money nominally, but to service that debt, that ate up more of your fixed budget. And that's the point I was trying to make, and why I brought it up in the lesson, is because when the interest rate goes up, your wages don't go up, it stay the same. But then
So
the portion of your wages that are consumed by servicing your debt, or in other words, paying interest, goes up, and so therefore that's less money you have to spend on the necessities. But I really have to go though, so
so
I'll see
basically
everyone around.
okay. So basically, in conclusion, the raising of interest rates is the banks further tightening their grip on the economy.
Yeah, that is an element of that. Unfortunately, the banks. This is complicated. There's full books about this, and that's the fucking like real crux of the issue here.
I've read on some of it. It's just I don't fully understand it, but I really think that I need to understand it.
We probably would need a class. I'm not joking. We would need to make a class maybe to fully understand it. But that being said, you do definitely have the step above understanding of your common everyday American, and so we do have that. So you're good. Don't worry. But yeah, I got to go too. But no, it's been great talking with you.
Yes, thank you.
All right, see you at the
Thank
next.
you for joining.
Yeah, see you at the next one.
Thank you.